Welcome to episode 20.5 of Urbanchartchats. And I called this episode 20.5 because after reviewing episode 20, I feel like I left you guys short a little bit. So I don't want anybody to feel disappointed. So we're going to call this 20.5 and we're going to attack a tougher subject called RSI. If you've been doing your due diligence and checking up on your trades and how to invest, I'm sure you come across these three letters, RSI. What they mean, relative strength index. Now, what does that mean? A relative strength index is going to show you the predicted or indicate to you the predicted movement of the shares or the company that you own. How do you look at it and why do you look at it? It's because you want to see if your company is going to go on an uptrend or if it's going to start a downtrend. How you read it, the range in the RSI consists of 0 to 100. 100 meaning the max or overbought. 0 meaning oversold or the lowest. Now, your typical range is going to be between 70 and 30. 70, of course, meaning overbought. 30 meaning oversold. Most companies are somewhere in this pocket. So whichever way it's leaning, then you know the direction that it's going to go to. Why do you look at your RSI? Is to try to grasp a rate of the rise and fall of the stock or give you a prediction, an indicator. And of course, the RSI goes across a 14-day chart. So it gives you kind of an average feel of the company that you're looking at. So you know how many times it was overbought, you know how many times it was oversold. So you estimate that range together, and then you kind of figure out when to buy in, when to get out. Now, I'm going to tell you why I don't feel it's really an indicator and it's more of an assistive tool, is because the RSI is moving at around the same time as your charts are moving. And if it was a true indicator, the word indicator to me means that it will show you something before it happens. Look at it as in if you were indicating to take a left turn, you put the indicator on before you actually take the left turn. That way, the person behind you knows that you're taking that turn. The RSI doesn't really do that because it moves at the same time. So your charts are moving and your RSI is moving at the same time. So while I was talking to you, I looked up a chart. I'm going to show you the chart unplug real quick. Now, if you notice your RSI, see where I clicked, you see the candlestick, it happened at the same time. And this is live. So your RSI now is indicating 70.15. And your stock price is also moving around the same time. So how is that an indicator? It's more of an assist to confirm that the direction of where you're going, because it doesn't give you it ahead of time, predicting the next movement of it. So I would use RSI as a nice assist tool when you're trading, but I wouldn't technically call it an indicator. So now that you guys know what RSI is, how to use it as an assistive tool, now you can add that to your arsenal, and hopefully it helps you try to decipher some of the volatility ranges on your trades.